Euro dollar, we start with the weekly chart, and at the weekly chart we can see that the level of 1.1367 looks more and more like a temporary top for the PM. We can see that the weekly 100-week moving average is going slightly to the downside, and for several times this line prevented the pair from getting stronger. This happened also one more time in August. So the main scenario, looking at the weekly technical indicators as well, is that the pressure on this 50-week moving average just below 1.11 will intensify. We will get to this level in the coming days, and the pair will probably test lower levels. Daily chart of the euro dollar, we can see that here the daily moving averages are almost horizontal. From our previous webinar, which was last Tuesday, we can see that the dynamics of this line hasn't changed a bit. It means that all in all, the euro dollar will somehow remain in this range of 1.13, 1.11. This is the main area of action for euro dollar bears and bulls. Here the pair doesn't show strong momentum. We have the swings, but generally the fundamental pricing of the euro dollar is somewhere in this range, and in my opinion it is a rather fair pricing, taking into account the lack of further monetary tightening in the United States, the lack of the rate hikes in the United States, and on the other hand, loose monetary policy of the European Central Bank, but not too loose maybe. The loose monetary policy that has somehow lost its novelty. So the fundamental levels look all right for the range-bound trading. If you look at the 4-hour chart, those support and resistance levels we spoke about last week, here they are painted in red and green. They actually remained pretty the same. I have told you that our main target is at 1.11, and this is the level on which I'd like to focus. This level represents an important weekly level. I'd like to use the indicator called pivot points multi-time frame for my weekly analysis, because I find that these levels, weekly ones, are very efficient and they work really well. Let's have it on the euro dollar chart. This light blue line is at 1.1177. This is the central pivot line for the euro dollar, and below this level the picture for the euro dollar is bearish. We can see that we are in the bearish territory now, and the weekly support according to this pivot indicator is also at 1.11 level. So this is the level which will draw the pair, which will attract the bears to it. The next support is at 1.1047. A close on the daily basis below 1.11 will send the pair to this area. And the final weekly support, the possibility that we'll get here isn't very high. It is at 109.71, and this level will come inside only if the European Central Bank surprises the market and delivers some great monetary easing package or gives a really strong hints on its desire to further ease monetary policy in the euro area. So here are the levels to watch for the euro dollar on the downside, and on the upside we can see that strong resistance is located at 1.1212. This is 100-day moving average. 1.1231, this is the high of August 2nd, and also the pivot weekly resistance line. We can see that the candle formed on Friday on the daily chart has a very long upper shadow. This means that the bulls were unable to settle at these high levels, and it means that probably some large players have big positions to sell the euro above 1.1230, 1.1250 area, 1.1280 area also reflects this previous resistance line, which was breached by the pair to the downside at the end of August. 1.13 and levels a bit higher represent next important resistance levels, and if somehow we'll see recovery, a rebound from the single currency, this will be the levels to watch for the appearance of new short positions and new action of the euro dollar bears. Also here we have on the 4-hour chart the negative intersection of the 50 period moving average and 100 period moving average, which allows us to expect that there won't be strong attempts on the euro dollar to get higher, and that trading will focus on getting to lower levels of support we've mentioned earlier.